Real estate is not risky, but bad math is. If you're buying based on hope instead of true numbers, you're not investing, you're simply gambling. These are the 5 numbers every investor needs to master. Whether you're flipping or burring or holding for long term, these are non-negotiable. If you don't know who I am, my name is Danny G, and I've bought hundreds of deals. I've flipped over 75 houses. I own a rental portfolio of 26 doors, and I've helped dozens of investors do the same. You know what I've found is where most investors go wrong? Simply the numbers. They guess, or they inflate, or they rush. So today we're gonna fix that. Purchase price. This is the foundation. If you get this wrong, nothing else matters. You have to buy right. You have to look at what the market's already proven. The way that I do that is that I pull 3 to 5 sold comps, not active, sold comps that are similar with the bed and bathroom count, half-mile radius max, and then be able to expand if I need to. All right, welcome back. So never base your offer on active listings. Again, they're fiction, they're hope, but sold comps, those are the truth. Those are the ones that you actually base your numbers on. And then you take all of those numbers and then you plug it into dealcheck.io. It's a free underwriting software, super helpful for any investor out there. I use it on every deal because it allows me to break down my cash on cash ROI, how much cash is needed, my projected cash flow. It just is really helpful. And so no matter how good the house looks or how hyped up it is by your buyer's agent or by someone else, if you buy it too high, the deal is dead. If the numbers don't work, you have to be okay with walking away. That is the person who has the most leverage in a negotiation. You want to buy to be profitable, so make sure that the numbers work out for you. Rehab budget. This one has rehabbed me, so I know that people out there have also been burned by it as well. But in the past, I've budgeted 15, 20,000 and then ended up going basically double that. Get 2 or 3 bids during the due diligence period. So during that inspection period, don't just trust your gut, because there really are things that someone who's not very trained in this industry, you want to make sure that you're hiring a contractor or getting someone that's experienced to know what they look for. And then even then I would still tack on a buffer somewhere between 10 and 15%, because you want to be able to give yourself some margins if for any reason something comes up. If you are flipping, stay away from full gut rehabs unless you're experienced. Like, I see too many new people wanting to take down this huge project. That is where a lot of problems could start from. Once you start opening up walls, once you start pulling up flooring, there's so much more that becomes uncovered. And so if you're newer to the game, just start with easier cosmetic flips. It will get you used to kind of the processes and the systems behind it. Ideally, you really would just want something that's outdated, that needs some cosmetic work, maybe like an outdated kitchen, outdated bathrooms, flooring, and paint. That is where the fastest equity is going to live. Number 3 is the ARV. This number is where most investors get greedy and then they get burned because of their greed. Be realistic. Don't have a bias towards it. Say the numbers are the numbers. So I want to be conservative with my numbers. Assume the lower comp. Don't try to push to the top of it, especially now as we're trending towards a buyer's market. You want to start pricing it on the lower end, maybe 5% what the comp value would be, because you want to stand out. This number is so important because you're projecting what you're going to sell it for. And if you think you're going to sell it for more than what you really can, there goes all of your profit. Number 4, the monthly operating expenses. Cash flow is a myth if you're ignoring real expenses. Here's what I include. So PM fee is automatically 8 to 10% off the rent. Vacancy fee, you need to be saving for the vacancies because those are real, 5% every month. CapEx, so like when the roof goes out or the AC goes out, you want to start saving for those repairs. That's 5%. Another one for maintenance, for the small water heater that has a leak or a leaky toilet. That's another 5%. And then obviously you want to take into account taxes, insurance, utilities, all the stuff that would be pertinent to your property. So people love to say that, oh yeah, I get all this cash flow until the AC goes out and then they have no reserves. That is how investors lose properties. It's not because of a lack of equity, it's because of a lack of liquidity. And so even if you are holding, you need to factor in holding costs like interest, insurance, HOA, utilities, like those stack up. And if you're not accounting for those, you could really get burned. So every month that you hold that property, it's eating away of your profit. You want to make sure that you move with urgency in these flips. Number 5, cash on cash return, or ROI. So this is your real return. It tells you how hard your money is working. So for rentals, the way that you do this, the formula is annual cash flow divided by cash invested. And then for flips, you want to take your net profit divided by the cash invested. And so what you really want is a percentage somewhere in that 10 to 15% for cash flowing properties. And then if you're under 8%, like typically that's a pass. If you're more than 12, 15, that's a really good deal. For flips, I like to be at 50% ROI in 6 months. So that's how I'm able to double my capital annually and still let that compound effect take over. And so I see too many investors, too many people brag about being in real estate who have done maybe 1 or 2 flips and that they didn't make any money. This game is not about being busy or showing off. It's about making money and helping people improve the neighborhood. Run the numbers, be conservative, protect your downside. This is literally your capital that you're putting out there. And there's only so much capital that you have. You want to make sure that you're protecting that by doing your due diligence. So be conservative with them. A good question that I like to ask is, would you still do the deal if something went wrong? And so the reality is that if you're not okay with that, then you have to walk away. So like if you're projecting a 50K profit on the back end and then you only get 20K, like, are you okay with that? You have to be realistic, because if for any reason you can't make that 50K, or you're only projecting 10 and then something goes over and now you're in the negative, like, you want to make sure that you're padding that. That's a real part of real estate. Like, it's not perfect. It's houses and people and contractors and tenants. Because I promise you, there are 2 truths in real estate. One, that the project will take longer than expected. And 2, it's going to cost more than what you think. And so knowing that makes it a little bit easier, because you could pad it into the underwriting. You could actually project that and incorporate it. And like, does it make sense? If it's too tight, like, just pass on it. It's better to say no than to actually take it on and then lose money. So if you want to make this easier, use dealcheck.io. Again, plug the numbers in. It'll take a few minutes, but it'll give you a crap ton of very important calculations. These are the 5 numbers for your filter. They will protect your time. They will protect your money. And most importantly, they will protect your future. Don't make mistakes. You could only do so many deals and lose money before you run out of money. And so be wise with it, be conservative with it, but take the risk. If you find a deal that does check the boxes, that's in an area that you like, that is at the right purchase price, that doesn't need a lot of work, and that does have the right ARV, pull the trigger. I know it's scary. I know that stepping out there is risky, but I promise you, if you never take risks, you will never level up. If you have any questions or other topics that you want me to discuss, leave them in the comment section. I'll be glad to answer them. Go out there and crush it. Thanks.